Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing John Sclodnick, the CEO of Nevada King Gold Corp, which trades under the symbol NKG on the TSXV. We currently cover Nevada King with research and have a buy rating and 40 cent per share target price on the company. John, great to have you here today.
Thanks, Ben. Yeah, thanks for initiating coverage on us, and yeah, great to work with you. And glad you see
Mm-hmm.
the merits of the project. I think we got
Yes,
a lot to
we're, we're
offer here.
we're certainly excited to see you guys execute in 2026 here. So with that, I'm going to leave it to you to walk us through, and the listeners that aren't familiar with the story, through your deck, and then in the back half we'll get into some Q&A after that.
Perfect. Yeah, I'll just share the screen. There's a deck we've got up on the website, and yeah, I think it should turn out to be pretty good time to launch. I know in my equity research days, you always wanted to pick the right spot just before launch, and yeah, I think you might have hit it, and I'll get into some of the
I
reasons
hope so.
why and some of the catalysts we've got going on into year end and really in 2026. But yeah, I mean, the key story here is that it is high grade oxide and in Nevada, as this title slide indicates. Those are kind of the keys, and it's a bit of a rare proposition, I think, to have the grade that we do in oxide, particularly in Nevada, a jurisdiction that has historically been fairly well picked over if you've got anything outcropping. And that's one of the differences with our project, is that anything that had outcropped had turned into a mine, and the rest is under post mineral cover. So, before that created a bit of a challenge for exploration, but obviously we're putting all the tools in our tool belt to work here and using geophysics, geochem, machine learning, hyperspectral, just everything to give us a peek under the cover. But anyways, let's get into it here. Really at the heart of the project, we've got over 1 million ounces at 1 gram per ton plus. As I mentioned, all oxide. So that makes it one of the highest grades for oxide developers in the US. We do own 100% of the property. Top mining jurisdiction in the world, came number 2 in the Fraser Institute recently. The resource itself of Atlanta is on patented land. We also have a past production there, so that helps in terms of getting through permitting. Also, just slightly lowering the initial capital hurdle to get into production. We've also run some met work as well. We've done phase 2. So that shows a run of mine heap leach component and a conventional milling circuit as well. Right now, we're wrapping up our phase 3 program, but we're still fully funded for a phase 4 program, which would certainly allow us to do, roughly an equal amount of drilling for phase 3 into phase 4. So that'll be follow up for the work that we've done so far. And a key differentiator, I think, with our story compared to some other, junior developers, is the alignment with the management team. Management and insiders own a little under 40% of the stock, with about $40 million of actual money invested. So this isn't, founder shares being offered. This is real money going in and being invested in the company. So we're well aligned with shareholders. We are shareholders, and we're highly motivated to get this stock to an appropriate level in terms of valuation, and ultimately expect this to be quite attractive to mid-tier producers. Just to get into a little bit more detail, as I alluded to, it is a past producing site. So there is a pit that was mined out for Atlanta. That's near the resource area. We're close to Las Vegas, so yeah, just about 260 kilometers north there. Massive project area, 130 kilometers squared. So that encompasses that entire caldera system, which is the system that we're exploring in. We've got that over 1 million ounces in M&I alone at 1.14 grams per ton, plus another roughly 100,000 ounces at 0.84 and inferred. The M&I increase was 122% from our previous resource estimate. And that was based on over 100,000 meters of drilling, plus some historical drilling went into that resource as well. And really, this land package was put together not to find 1 million ounces, but to find a multi-million ounce system. And the phase 3 work that we're in the midst of, that's really stepping out from the resource zone, looking regionally and looking for satellite deposits and other areas of gold deposition. Now, I won't dwell too long on this, but we did have some management changes recently. Colin Cattell moved to the chairman role from the CEO role. He's on the board with Bill Hayden, who remains there, and we added Mike Doolin recently. Bill Hayden's been Robert Friedland's right-hand man and a key person in developing and finding Kamoa-Kakula. Mike Doolin has been instrumental in Karora Resources, Klondex as well, and right now is COO of America's Gold and Silver. I stepped into the CEO role to replace Colin, also on the board. And then we've got Jeff Stieber here, who we just recently brought in as CFO, who's been a huge value add with a ton of experience at a number of different companies from exploration through to production stage. And then we also recently added Justin Daly as VP Exploration, who left another junior explorer in Nevada in the CEO role to come over to work with us at Nevada King. And really, as all geologists do, they're looking for that significant discovery, and that's what motivated him to come over. The team at site hasn't changed, though. Still have Cal Heron leading the team there with over 40 years of experience in the Great Basin. Hayden Smith has been there from the outset, and Nate Laver too, helping with the operations side. Moving over here, won't dwell on this for too long, but obviously, a wonderful state for mining, second best, as I mentioned, in the Fraser Institute. A number of companies have come in recently here. Sorry, this keeps ticking over. But we had Orla come in, obviously with South Railroad, Integra recently, Oceana Gold. You can see the names listed there, and most recently, Minera Alamos has gotten in for exposure to for the Nevada and kind of the ease of permitting that you have there. Just a little bit of history here. This was explored and there was some small scale mining there in the early 1900s. Really, you got to more modern mining in 1975 to 85 with about 110,000 ounces recovered there in gold and about 800,000 ounces of silver. There's two open pit mines there. There was a Silver Park as well as Atlanta, and there's also the Bradshaw underground mine. There's a number of other shafts on the property. I was just down at site last week, and there's about 4 or 5 shafts on the property as well. So obviously this has been historically well. I guess it's been the old timers. Obviously at that gold price environment saw something positive there. We're mining at a small scale there. So we really see the potential here, particularly in this gold and silver price environment, to unlock a lot of value here, particularly where they used to be mining. This then went into the hands of Gold Fields in the early 90s, and then Kinross, and then most recently we acquired this property from Meadow Bay. Those three did about 40,000 meters of drilling, and so we've been benefiting from that. We really started aggressively exploring this in 2021, and quickly saw a lot of success around the pit, and I'll get into that in a minute. But really, just to stop here and look at kind of what we're working with. If you're going to put a gold deposit anywhere in the world, you probably choose the state of Nevada. You probably pick an area with past production where there's already a disturbed pit. You got great road access, core shack on site, geology office, quarters for the crew as well, which allows us for a very low cost of drilling, between 70 and $80 a meter, with the crew staying on site there. We got all the water we need and power to site. So really the best place to have a gold deposit, and then you add on the fact that the resource is on patented land, and it's really the perfect area for exploration. Like I mentioned, close to Nevada. So you fly into Nevada, drive about 3.5 hours north, and you get to the mine site. It's just very easy to get to, obviously, with the location in close to Las Vegas. Decent turnout for site tours for a company of our size. So a nice little perk there. But as soon as you get outside Nevada, there's really nothing. There's no economic activity. Or sorry, I should say, as soon as you get outside Las Vegas, and our project is in Lincoln County, not a whole lot of economic development happening there. So a lot of support to move this project forward. Now, looking at the site here, this is kind of the project layout. You can see the 130 kilometer squared area here, encompassing almost 1,600 different claims. So a really significant area. We've been exploring it aggressively right around the caldera area. So you can see the red outline here, that's your caldera, which is the edge of a volcano. A caldera is a volcano that's collapsed in itself, and you can have this mineralization come up around the outside where the volcano is collapsed inwards. So that's typically where we find the mineralization. The main mineralizing fault is this West Atlanta fault here, and that runs right through the middle of the resource area here and down. And obviously that's a key area for exploration, looking along strike to the north and to the south. Another key area for exploration for us is here, the historical Silver Park mine, and in and around that. So that's a basis for our exploration and the regional program that's underway right now. And really the best analog for us is Round Mountain, which is another caldera-hosted system fairly close by. It's the closest major operation, about 250 kilometers away. And they've got a little under 25 million ounces there. But when that went into production, they only had 1 million ounces. So some similarities between the two projects. This just looks in a little bit more detail at the resource we announced in June. Like I said, about 1.1 million ounces at 1.1 grams per ton in all categories. There's a real high-grade core here, though, which is worth noting, where we've got a little over 500,000 ounces at 4 grams per ton. So there's a really high-grade core here driving the economics. That's partly what leads to the kind of binary track here, where we've got about half the material reporting to a heap leach and about half the material reporting to the mill. So obviously, if you've got material that's 4 grams per ton, you're going to put that through the mill for recovery's sake. Also, we've got over 90% of the ounces in that higher confidence M&I category. So there's been a well-drilled, high confidence resource. I should also note that the resource estimate was done at $2,200 gold and $25 silver. So, completely different, setting that we're now in here, over $4,000 gold. Looking at how the grade stacks up versus other projects in the US of at least 1 million ounces of oxide, we're the second highest grade after the Coliseum project in California, and that one's actually more focused on rare earths, just given it's in California and harder to permit a gold operation. You got a couple projects after us that are in Idaho, and probably a little bit more challenging than Nevada to permit. The one after that, Silicon, that is in Nevada, but it's controlled by Anglo Gold Ashanti. So really leaves us as a bit of a cut above the rest in terms of grade in Nevada. So it's a bit of a rare beast that we've got right now. Now this gets, when we're looking at the project and had just acquired it, the first thing we did during the pandemic was we got to the bottom of the pit where no previous operator had been able to do, just because of logistical challenges where we had to build a road to get down there. It was challenging, but once we did get to the bottom of the pit, we drilled a fence of 5 holes. And we were getting grades between 2.5 to 5.5 grams per ton over 50 meters or so. And, at this point, it was game on. We're really surprised to see that. We then stepped out about 560 meters to the north, and then at that point hit about 9 meters of 8.3 grams per ton, and this quickly became the flagship project. And we're really excited with what we're seeing there. So that concluded the phase 1 driller program and led to a follow-up program for phase 2. A key takeaway from that phase 1 was a reinterpretation of the setting here. And past operators viewed this as just a 45-degree single angle vein structure. And they were putting in angled holes. So, you're not hitting this at the right angle. You really want to be drilling this vertically because of our new interpretation of a number of different step-down structures here with multiple faults, allowing for better gold deposition. So that was what we were looking for phase 2, was to test this thesis. Is this a number of step-down structures with multiple faults? We did about 75,000 meters in that phase 2 program and corroborated the theory that yes, it is. A key for us was finding the intersection of these faults, and that's where you get some phenomenal bonanza grades, which I'll show you in the next coming slide here. But really, we drilled this very aggressively, this resource area, which is why you have over 90% of the ounces in the M&I category. But it was really important to find these high-grade bonanza structures, and that's where you get the cross-cutting faults. You can see some of the drill results that we were able to put out in those years. The one that put this on my radar before I joined the company was that top drill hole there, hole 44, which hit 11.64 grams per ton over 108 meters in oxide. in Nevada. That was the best hole drilled in Nevada in 2023. And you just see a number of absolutely phenomenal high grade hits there. And that is now embedded in our resource update. So it contributes to that 500,000 ounces at about 4 grams per ton. Through 2024, we were able to put out 30 of the top 100 most significant intervals drilled in the U.S. By pre-revenue companies. So that's the highest concentration of any company. So it was a really prolific year in terms of drill results, where we're drilling both within the Atlanta resource and pushing the boundaries of that resource. So that really takes us up to present day now. And we are currently, in the midst, towards the end of our phase 3 program. And the phase 3 program was now stepping outside of that resource area and searching regionally, looking for satellite deposits. 1.1 million ounces at 1.1 grams per ton. That's a phenomenal start right now. But like I said, we didn't put this package together because we thought there was a million ounces. We thought there's a number of different deposit areas on this property, typically located along the caldera margin. So that is where we're looking. We're in the midst of this program. We've been drilling Atlanta North, drilling Atlanta South, and Silver Park, and finding above cutoff grade mineralization and all of these different targets. These targets are serious step outs. They're 2 kilometers to 4 kilometers away from the resource zone. So this is effectively reconnaissance drilling, and gold's hard to find. So we're thrilled in 3 different areas, 3 target areas. We're finding above cutoff grade gold, and it looks like something's coming together at Silver Park, which I'll get into in a minute. Really, what we wanted to do with phase 3 was find different targets that will meet our cutoff. And there's a number of other targets, but we want to be focused with our drilling budget. And so really it was these 3 areas that seemed the most prospective, and these are the ones that we've been attacking through the phase 3 program. Silver Park, like I mentioned, this is the most advanced target right now. This is the area where there's past production, where there's a past producing open pit, a number of shafts in the area as well. So we're really excited with this target. We've had a number of intercepts here, all close together. You can see from the drill holes located on that slide here, and getting some nice hits, including 0.83 grams per ton over 67 meters, hitting a series of 3 different intervals here, but averaging in hole 21 about a 0.5 gram per ton over 92 meters. So for us, close to surface, this is exactly what we're looking for. That type of lower grade, close to surface satellite oxide deposit that can help it bolster the heap leach. So we're really excited with Silver Park, and really we think that this could potentially be the other half of the Atlanta resource. And when you look here with the Atlanta resource, it's the same mineralizing event that's mineralized Silver Park over here with these holes. So we're really excited. It shows the exact same geochemical signatures. And so if it's the same mineralizing event, we're thinking that there's potential to find higher grades here as well. And the key there is finding the cross-cutting structures. So we're going to continue to drill Silver Park and look to both push the boundaries and also find some higher grades within the area that's already been drilled. Another area for us is Atlanta South. This is an area that the geologists at site are quite excited about because it's in this Pogonip limestone. So it's a wonderful host rock for gold in Nevada. We have a number of other sizable deposits hosted in the Pogonip limestone, namely Archimedes with about 5.4 million ounces, and you got Long Canyon at about 2 million ounces. Those are 2 other sizable deposits in Nevada in the same host rock. So we're pretty excited to figure out what's going on here. There's a completely different type of host rock than the Atlanta resource and Silver Park. Probably potential for this to be a larger mineralized endowment than the Atlanta resource itself or Silver Park itself. But right now it's early days for us. We did hit a nice intercept of 0.2 grams per ton over about 50 meters. We think that could potentially be on the periphery of the main zone. So it's important for us to follow up on that hole and see what else we have. But this was the area of focus for Kinross when they were exploring, and Goldfields as well, because of that Pogonip limestone host rock. And that's your typical Carlin style deposit. Atlanta North is the earliest stage of those 3 targets. We acquired this land package in 2022. and really just poked 7 holes into it. And so we're happy to get about 0.3 grams per ton over 37 meters at about 37 meters depth. This is about a 4-kilometer step out from the resource zone. So this is a pretty bold step out, but it does create a 3-kilometer gap between historical holes that were drilled by both Goldfields and Golden Chief. The better of those 2 holes hit about 0.9 grams per ton over 11 meters. And both of these holes, our hole and the historic holes, exist along that West Atlanta mineralizing fault. So we really want to close the gap there, put some holes in between those and see what's there. Now, moving on to the metallurgy. This is an area where, we're quite pleased with the results. When you take a step back here, when you're, looking at a project, it's one thing to have the gold in the rocks. That's the first challenge you want to overcome. Okay, good. You've got gold in the rocks. Now, can you get the gold out of the rocks in an economic fashion? And we did the phase 1 met work with Gary Simmons, who was the former director of technology and metallurgy for Newmont Mining. So as credible as it gets in terms of met work, the phase 1 was successful. We did phase 2 as well. These are the results from the phase 1 and phase 2 work. The key numbers to look at here are the non-silicified volcanics. This is the material that can be run-of-mine heap leach. That showed a average gold extraction of 83%. And the other material would go through the mill, and that showed extractions ranging from predominantly 86 to 88% in the silicified volcanics and the silica breccia, which comprise the other significant portion of the resources, along with the non-silicified volcanics. So you can see it's a fairly straightforward here flow sheet for the processing, with the low-grade volcanics just getting run-of-mine stacked on a heap leach pad. That's as low cost as you can get for processing, as low cost you can get for initial capex. The other stream is the mill, and fairly straightforward conventional milling for that type of material. Now, looking at valuation, this is where we've got some work to do in terms of closing the gap, because we did some work looking at other acquisitions of oxide deposits in Nevada. The average acquisition price paid per ounce was about $230 per ounce, and we're trading at about $40 per ounce. So there's a huge gap for us to close. And that's important for us to start doing that and closing that valuation gap. Also worth noting that our grade is significantly higher than that the average that has been acquired. So I think that there's obviously a strong rationale here for that gap to start closing, and I think that's why it's such a wonderful setup right now for investors to step into the story, where we start to show the value in 2026 through potentially success at Silver Park. We could also look to potentially put out economics in 2026. So there's a lot of aces up our sleeves, if you will, for us to show the market the value that we have at the Atlanta resource, and to potentially bring on Silver Park resources and really show the economics of the project that we have, and hopefully start getting closer to that gap, closer to closing that gap with that average. So we are covered by Desjardins Research, and we'll need to add Atrium to this, but this is from Desjardins here. Just showing other gold developers and where they trade at on a PNAV and EV per ounce basis, and we're trading at about 65% discount to that peer group. And it's not the most perfect peer group; it's just what Desjardins happens to cover, but still a massive gap here, massive discount compared to where peer developers are trading at, and so expect in 2026 we'll start to see that gap close. Given, as I mentioned, we probably have as high margin, if not higher margin ounces on a number of these projects. Now, looking at the capital structure, over the past year, that institutional investor ownership has grown from about 2% to now 13%. One of the things is, if you're an institution, it's hard to come in through trading on the board, through the market. So they often come in through financings, and that's how Franklin Templeton established its initial position before increasing it. DWS as well established its initial position through a financing before increasing it. We also have Ixios and Rothschild as shareholders who came in before Franklin and DWS, a number of other institutions with smaller positions as well. Got Desjardins, Roth, and as I mentioned, we'll need to get this updated to add Atrium on there. But yeah, this is a bit of an unusual chart to take a look at, sliding in this direction. Generally, given the gold price environment, you don't typically see junior gold developers with a chart like that, and especially with institutions growing their positions too. So it really creates a pretty unique opportunity where I think over the past year, we've been hit by our resource update where there were expectations that were pre-existing, and you can see there was a big drop, about 20% share drop after that resource came out. And then since then, we've been doing regional exploration, which has been less exciting, I guess, than some of the bonanza grades that have been put out. But this is exactly what we're looking for. It might not be the 11.6 grams per ton over 108 meters, which we would still love to find. But what we're finding absolutely works in terms of bolstering the resource ounces. So it really does set up a pretty incredible opportunity here with gold at all-time highs. The U.S. as a jurisdiction never being more favorable than it is now from a permitting perspective, and our stock, kind of closer to all-time lows. So I think it's a really good setup here for investors to get in at this stage, and we're going to do some work to correct that valuation in 2026. So really this is kind of our summary slide here. But really, what we're looking to do and what we're looking to build is a project that hits the critical mass for the mid-tier producers, and that's getting beyond the 1.1 million ounces, something closer to maybe 1.5 million ounces. I think, with the work that we're going to be doing at Silver Park, that will help us get there with a successful infill drill program and continuing to explore regionally. But right now, you're getting the backstop of a 1.1 million ounce undervalued resource, plus all of the upside of an aggressive, fully funded exploration program in Nevada looking for other oxide deposits. So that really summarized the presentation there, Ben.
Amazing. Thank you, John. No, it was a great presentation. I think you covered a lot of the questions that I had, but what I will sort of I'll dive into a couple questions and I'll also reiterate a few good points. If you want to stop sharing the presentation, you can, and we can grow on the screen here. So firstly, cash and access to capital. I wanted to just ask about that. I know you did raise some money relatively recently, and you mentioned even exploration programs in 2026 are fully funded. So can you just touch on the cash balance and your position around access to capital?
Yeah, so with our latest financials as of September 30th, that showed about 8.5 million Canadian. If we're going to put out a 20,000 meter drill program and our cost of drilling is about $80 a meter US, that would be about $2.5 million Canadian. And so, we're very well funded right now to be able to do that 20,000 meter drill program. Our phase 3 started out as a 20,000 meter program, and then, as we're having success, expanded it to 30,000 meters. I think we're going to start with a 20,000 meter phase 4 drill program, and potential to expand it there as well. But that cash balance, as I mentioned, there were some management changes. So that's all post, severance payments and leaves us with a pretty clean and lean management team right now. So our cash burn is relatively low, and certainly puts us in a strong position to continue to do the regional exploration work that we want. If we're looking to put out a resource update in Silver Park, we're funded for that as well. Obviously, that's going to be contingent on successful infill drill program. But that's kind of how we're looking at things. Obviously, at some point down the road, we will need to raise, given we don't generate cash. We're an exploration stage company and looking to continue to explore. But yeah, right now we've got a pretty good runway forward and a lot of catalysts ahead between now and then.
Yeah, no, that's great. And I guess maybe, I don't know if you mentioned it during the presentation, just on the phase 3 program, how large was that program? And then it sounds like you're going to mimic the size for the phase four, if I'm correct in that.
Yeah, so phase three that started out as a 20,000 meter program and then got to a 30,000 meter program once we were seeing the success. And I think phase four will probably announce as an initial 20,000 meter program would feel manageable to us. Gives us plenty to work with. Again, with that cost per drilling, this is relatively shallow oxide drilling that we're doing, so you can get a lot of work done at $80 a meter. So that would look to cover the infill program at Silver Park, and just continue to do work. It'll be success based. If we're having success at any of Atlanta South, Atlanta North, I think we'd like to have three regional targets. So I think if Silver Park's moving to an infill program, I think that will be backfilled with Western Rim, where we put out a press release on that area. Currently, haven't done any deep drilling there or significant drilling. We've just done kind of surface level exploratory work and use some other tools that we're excited about that target. But those are the three areas, and whatever is giving us the most joy, showing the most success, that's where we'll allocate our dollars to.
Yeah, and certainly that cost per meter of drilling is industry leading and fantastic. So why not, add to that meterage and keep the drills turning? I guess you just mentioned the other sort of targets. It sounds like the phase four program is regional exploration, but areas that you've seen some drilling, I guess higher confidence areas. The property is quite large. Are you planning on doing any more sort of greenfields exploration into areas that you do not have much data on today?
Yeah, absolutely. We've got a number of different targets on the property. In past slide decks, I think it's shown that there's 15 different targets on the property, and there's a lot of different areas for us to explore. We just want to keep it focused in terms of drill budget, keep that focused and keep the market focused. Obviously, there's a lot of different lot to keep track of for a junior explorer. So we want to keep the messaging relatively straightforward and have it kind of be three key areas of focus for us. But there's a number of different areas on the property that we're excited about that all tend to coincide with the margins of the caldera. But we've recently done CSAMT work over significant portions of the property, run drone magnetics, completed a number of different geophysical tools, done geochem. We've done rock sampling all over the property as well. So we've got a lot of data in a lot of different areas. Obviously, the ultimate test is the drilling and seeing what the drill holes show. But we recently put these different data layers through a machine learning program. So the AI results really kind of corroborated the way we're viewing things too, but nice to kind of have those two different viewpoints on where we should be looking. So you've got kind of those three areas. Obviously, Atlanta North and Atlanta South are extensions of the resource along that mineralizing fault zone. Silver Park, feels like a fairly obvious place to look right beside a past producing gold and silver mine. And then Western Rim, that's an example of us generating new targets through the work that we're doing. All these different exploration tools that we use. I think hyperspectral was a big one in unlocking that. But these are all various tools to allow us to look under the cover where past operators weren't able to do that.
Mm-hmm, mm-hmm. And then I guess filling in the gap in Atlanta North as well as a pretty relatively untouched area that could pose a bunch of upside. On the phase four program, when do you expect that to commence? What's sort of your timeline for wrapping up phase three and then leading into phase four?
Yeah, so I mean, they're kind of just different numbers. Once we get
Yeah.
through the 30,000 meters, then phase four has started. We're fortunate where we can drill year round, and that's why it's just kind of naming things. I think part of the naming of a phase three to phase four was the purpose. And the purpose of phase three was to really, that was our first time stepping out from the Atlanta resource zone. And that was a completely different type of exploration
Right.
than we'd done in the past with the phase one, which was just kind of testing the resource, what became the resource zone. And then the phase two was following up and trying to define and infill that. And then phase three was, okay, let's step out regionally, see what we've got. So phase four, kind of the purpose behind it is to follow up on what we've learned from phase three. And so that's really looking at, infill Silver Park. Let's see if that becomes a resource. And then, following up on this work and like you mentioned, testing that gap from Atlanta North where that was found through the phase three. The phase three also kind of defined the Pogonup limestone component to the Atlanta South target. So trying to hone in on some higher grades there. And then Western Rim, that'll be the first time testing that. But really, I think, we last press release, we're at 28,000 meters through a 30,000 meter program. So we're almost there. It'll happen to coincide with, nearly the end of the year and then 2026 starting. I think phase four might get started a little bit before then. But yeah, given we can drill year round, it's really just kind of a naming and a little bit the change in purpose where we've got more data that we're building on now from the phase three.
Yep. Yeah, absolutely. And no, again, fantastic that you're able to drill year round, right? There's so many different benefits to operating in the jurisdiction that you're in.
Mhm.
I guess you mentioned potential economic study in the future here. What are you looking for? What would it take for you guys to start progressing towards some of those economic studies, PEA and so on?
Yeah, I mean, if we weren't having the success at Silver Park right now, where it looks like, you know, we want to figure out can that become a resource? If we weren't having that success from the phase three, we might be moving ahead with that a little bit sooner. But we first want to figure that out and just, we don't want to be throwing out, PEAs all over the place as we're finding new deposits. But Silver Park is advanced enough where we just want to first figure out what we have there. If we can, put a resource around Silver Park, then that could really kind of change, what the economics would look like on the project. We've done some internal work and are quite comfortable and confident on how those would look. Just to put out an economic study on just the resource zone at Atlanta alone.
Right.
But I know if we could find a satellite deposit, it just adds a lot of flexibility to mine planning. Also, you spread out that capex over more ounces. You can get the heap leach started earlier. There's just a lot of kind of different benefits to having that satellite deposit. So we'd certainly want to figure that out first. I think in terms of cadence and catalysts and timelines, we'll be doing the phase four drill program. Probably that'll kick off maybe before year end, if not kind of start of the year. Then we'll be able to figure out if we've got a resource at Silver Park, probably in the first half of the year, and then that would allow us to move to a PEA study potentially in the back half of the year. So that's kind of some timelines that we'd look at.
Right, right. Yeah, and obviously multiple catalysts in between with all the drilling that you just walked us through. And certainly, I do like to highlight, it's pretty obvious, but some people don't think about it, the psychology of an investor. It's hard to change. And what I mean by that is 1 million ounces today with the value of that rock is what 2 million ounces was a year and a half ago at $2,000 gold, right? So when you're looking at even what you have today, this would be a very highly profitable operation in a jurisdiction where costs would be that much lower from a capex perspective and sustaining expenses and costs, so on and so forth. There's so many different reasons why this would be quite a profitable operation, and we do talk about some of those numbers in our research as well. I guess just touching on the level of confidence quickly in the resource, you mentioned 90% plus in the measured and indicated categories. I would imagine for Silver Park, the goal is just an inferred resource for now until you can really understand where the value is, and before you really, spend a lot of money infill drilling. But then also, when you answer that, after you answer that question, can you just touch on um, how that level of confidence helps you guys accelerate the development of this from PEA to PFS and so on?
Yeah. So yeah, to answer your question on Silver Park, yeah, we just look to get to an inferred. I don't think the market gives us a whole lot more value for M&I versus inferred. What we did at Atlanta at that resource was important for us to figure out, confidence levels, and that's allowing us to apply what we learned at the Atlanta resource zone to Silver Park. So given it is the same host rock and feels like the same mineralizing event, I think you can have just higher comfort and higher confidence on that area. The drill spacing, I think if we get to 100 meters, will be more than sufficient for that to come into an inferred resource. But the purpose of why it was so densely drilled at Atlanta, at that Atlanta resource zone, is figuring out where these cross-cutting structures are, where the high grade. If you look at that, hole 44, which was the 11.64 grams per ton over 108 meters, that was drilled right through, the heart of a fault. If you step out 50 meters east, then suddenly, you're at 3 grams per ton. You step out, 50 meters west and you're at 1 gram per ton. So it's really important for the domaining part of figuring out the resource estimates and be able to kind of, domain how far to spread these grades. And so given we have that data from the Atlanta resource zone, it just adds a level of confidence for us to be putting out the Silver Park. And then in terms of kind of the economic study aspect, we've certainly done, a good amount of work here, both with the metallurgy and the resource, to, advance an economic study relatively quickly. We're not, this isn't a standing start. I should also mention on the permitting as well. That's not a standing start either. We go about our permitting work in stages. So we've done a number of plan of operation modifications. We're through about 4 of them now. And really, we do our biology studies, we do our archaeology studies, and all of that is to continue to push the plan of operations for exploration. But, these studies are being completed, and we've got a good handle on what's required. So again, we're always viewing this through the lens of a mid-tier producer that might come and acquire us. And we have discussions with these groups, have CAs in place, and we're quite cognizant of what they're looking for.
Right, right. Absolutely. And so I guess that just brings me to effectively wrapping this up, but I do like to sort of summarize based on some of the notes I took throughout the call. And, as you progress through the presentation, you kept checking boxes, right? Boxes that I look for as an analyst or from an investment. And a few of those are high grade oxide, one of the highest in the US, over 1 million ounces. We talked about the high confidence, with most of that being in the measured and indicated. Management and insiders, just under 40% ownership in the company, so highly aligned, right? You guys will make your money by having the share price appreciate. So you're going to be highly motivated to do so. Past producing operation in a great jurisdiction with significant and very good surrounding infrastructure, as well as infrastructure on site. Highly or I guess strong team from a technical standpoint. Very low cost of drilling. The list goes on here. Great metallurgy, both from a heap leach as well as conventional milling perspective. And then, like you said, towards the end there, growing institutional ownership, right, which is quite important as the company legitimizes itself and takes these stepping stones. But then to wrap up, the share price has not been performing to what you would expect in this market, like you said. And that's where I think there's a fantastic opportunity from an investment standpoint, because right now, if I'm looking at across the board for investments in the mining sector, you're seldom to come by one that isn't up 50 to 100% in the last year or two, right? And so that's where, for whatever reason, like you talked about, with the resource expectations maybe being a little bit different than reality, there's the opportunity for an investor to come in, over the near term as you continue to accelerate and continue developing the project there. So with that, John, appreciate the time today. Were there any closing remarks you wanted to end on?
No, I think just kind of addressing the share price, and to your point before, when I was in the equity research seat, looking at different projects, I really, if I was to step over from the capital market side, to a junior explorer, really want the risk to be with exploration in terms of finding gold. Don't want any
Mm-hmm.
risk with jurisdiction or nationalization or network or access or any of these multitude of different risks. So it felt like in terms of going over to an exploration development company, really as good as it can get in terms of a setup, and that if you do make the discovery, that those ounces should be valued much higher than they otherwise would if you're finding this in far-flung jurisdictions. That said, our ounces are trading below developer peers.
Yeah.
And I think to address what's happened with the share price, it's just been, as Lemony Snicket says, a series of unfortunate events, I guess, with the resource update and far more baggage associated and expectations associated with that update, than I was expecting. I knew that there were some, but didn't think it was to that extent. Then we go through some management changes, and the a chairman who left had a retail following, and so there's some turnover there. Then we get some, the drilling that we're putting out for the retail investor that was used to those bonanza grades in Atlanta. We're still hoping to find those, but this stage of exploration, we're now transitioning to phase 4 to follow up. But when you're just doing reconnaissance drilling, it's hard to find high grade gold, and so we're hoping to hone in on that. But yeah, it's just really been, and now I think we're kind of going through period. I think we're almost through it here. Potential tax loss selling, where
Mm-hmm.
if you're looking at where can I take some loss and then redeploy this money in the new year, we're the candidate for that. So it's just been kind of a series of reasons for our stock to kind of languish where it has. But that all clears up in 2026, where we've got kind of a new, fresh, motivated management team through the tax loss selling period. Been significant churn for anyone who wanted to transition out from the resource. And now the setup is an incredibly low valuation, an incredible entry point, continued regional exploration, undervalued resource, that's going to become, and I think we're going to be able to close the gap on that value, through showing resource growth, and then potentially through an economic study. So really excited with the setup for 2026, and appreciate your help with getting the story out there, and
Mm-hmm.
your research coverage.
Absolutely. All right, John. Well, yeah, I think you hit all the nails there. Appreciate the time. Thank you again for walking myself as well as the viewers through the story. Certainly looking forward to what's to come in 2026 with all the catalysts you just mentioned. And for our followers, if you haven't seen our research on Nevada King, you can find it all on our website at atriumresearch.ca. And again, John, thanks for your time today.
Thanks for your opportunity, Ben.